Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I'm a little bit late here. I just, was didn't go to sleep very early last night, and this morning, drifting off in my thoughts, and taking way too long to get ready. But we gotta lock in here because we got some movement here in the market. So we just had the PPI report coming out. U.S. PPI month over month headline expectation spot 4, actual spot 2. And then the core PPI month over month spot 3% expected, 0% actual. So we have a pretty big, I don't know what you want to call it, a miss or a beat with inflation. Depends on which way you want it to go, right? But the treasury market really skyrocketed up higher there. But the treasury market had lost a little bit overnight. So let's come to the volume profile. So you can kind of see there was a little bit of a pullback towards the higher end of the range and then a fall. And so far this news is just retraced this fall. I do think that this appears to be significant news. So we could see some further extension of this. In fact, with what I'm seeing right there, I think I'm gonna my policy is usually to not get involved in these sorts of disputes, but I think I'm going to do it. You see, there was this huge selling between 16 and 15, and it appears that they have already kind of washed that out and pushed a little bit higher. So I'm going to, as I'm doing this, try and market make myself a little position here. Coming back over here, S&P 500, not looking very good yesterday, but in the, not looking very good overnight, but during the regular session, they pulled out a pretty okay win and a little bit higher in today's overnight session. Oil still pushing up there. There are reports that like Gaza ceasefire imminent, but that doesn't appear to be pushing the the oil down too much. Gold and silver here taking a little bit of a spill yesterday. Copper still holding those gains. The Japanese yen, so we've seen a couple of places where like there's been some movement in the dollar, but the yen did not participate. But when you look at the larger picture, you can't really see a whole lot of that. So, and we got Bitcoin. Bitcoin, after taking a pretty good spill towards 90K, is a little bit higher this morning with Michael Saylor producing another at the money offering and buying some Bitcoin. But the spies are getting smaller and smaller. So some concerns there about that. But in the meantime, it is preventing them from dropping below 90K. All right, so we're already taking some pretty negative excursion on this. Interesting that Octavia says that he's short ZN. I really think, okay, that's really interesting. I'm going to take really excessive risk on this, okay? We are seeing a pretty massive flow selling against this. So this is kind of a should I call it a setup that I've never seen before. I don't think I've ever seen before. Okay, we had news. What do I think about the news? I think that it was surprisingly dovish. That it was like not only are we not seeing inflation in producer prices, we're actually maybe getting numbers that might make you be concerned about deflation. Yeah, I mean a 0 in core, that shouldn't happen. It should always be 0.2 or 0.3. You get 0, what's going on? That's deflationary. That's recessionary. Now, that might not be what CPI is, but I guess we'll find out tomorrow, right? But to have a report come out that's so dovish, okay, initial reaction to the news, entirely in line with what it should be, but then we're getting huge sells the other way. Now, I think that another potential factor in here that we need to be aware of is that overnight there was another report that Trump's team was discussing phasing in tariffs, that they wouldn't do the full percent right away, that it would start with a small percentage and gradually increase, which is viewed as more dovish than expected. But this was kind of put out with the caveat that like Trump had not seen that plan. So you could potentially see Trump commentary on that this morning. He might come out and put the kibosh on that and cause it to sell. That could be what's going on right this moment. I have to say, it is a pretty major 20K or so net selling in the 10-year treasury against me here. So what I'm doing is really stupid and crazy, okay? But I kind of want to be a part of this. This is something unusual, and I do believe that in the end that rates should be moving lower. Kind of part of me makes me wonder, like, is this like the guys that have been short for all this time are really kind of trying to shove it, really trying to scare people, something like that. I don't know. It's just that whole downflow is incredibly suspicious to me. Incredibly suspicious to me. The exact opposite flow that we should expect based on the information that we've been given. Okay, well, I was so slow getting ready that I haven't finished eating. So I'm going to eat while we kind of let this play out, all right? I guess the issue that I have with this flow that we're seeing overall is it's just not subtle at all. Like if you come in and you're like, here's a report, the headline numbers look dovish, but maybe there's something kind of buried in there that's not so good or something like that, right? You know, that would kind of be like where you'd want a subtle trade. But this is not a subtle trade. This is somebody hitting it really, really hard. So what could be the reason for that? Well, like my first, I think that my mind immediately gets conspiratorial about it, right? There must be somebody that has a position short or overall wants to get a position short that is really trying to scare the market with their execution. Now, another option could be that there is a passive flow long here. I'm not sure what it would be from, this time of month and everything, but there could be sovereign wealth fund or something of that nature that wants to sell, and they see this rise as an opportunity for them to unload, you know, and they want to do it quickly. Well, there's all these when there's all of this liquidity, and that might explain why it's so aggressive. Overall, though, it's an extremely unusual flow. I don't think I've ever seen anything quite like that. I think there are maybe some trades that are comparable on non-farms, but non-farms is a notoriously fuzzy number. Never seen anything like this on a PPI. Not even close. Okay, they do seem to have settled a little bit. Like they moved down, there was a stop. I added some more contracts. They pushed even further, and then they've come back to that spot. So, I'm just gonna kind of sit here. Maybe we see the flow shift and it turns into buy. I don't know. I need to keep a close eye on Twitter, because maybe there's some headline or some other piece of information in here that would really shift our mind, right? Full US 10-year yield is likely to surpass the 5% mark in 2025, says traders. That'd be funny if it didn't. But Israel-Hamas ceasefire in Gaza at closest point yet, officials say. I'm not sure. They're still pushing. Somebody seems awfully confident about this. Well, I think I'm close to the breaking point where that's, yeah, so many clicks. So much flow against me that I kind of have to give up on it, but I'm getting a little reprieve here. I don't think I would ever take a trade like this live. There's no way. I might take the trade, but I would already be stopped out of it by now, right? sorry, mute. You're right. Yeah, so I'll move the tape over here so you can see. The clicks that we're getting are kind of like this large order, 1 or 2 ticks away. So what that actually looks like to me is the market maker has kind of moved their liquidity out a tick. They've increased the spread a little bit. And that ticking is like a 700 lot or so, stacking and adding right there at 11. So I'm not too sure if it really actually means anything. Sure is unusual, though. Well, I think that you're on the right track there, Amir, that like, okay, we're not sure what's going on here in the treasuries. So perhaps the better trade is over in equity land because they did not get the same counterflow. So maybe if you want to go long, we just go and do it in ES. Then that would make more sense. Yeah. Yeah, I'll post the inventory cost basis in Discord. We actually are right back to the seller's cost basis right now. I'll just show you guys here on the stream. Jumped up real quick and reverted back to the cost basis very quickly. I think that this is a situation that has a high probability of creating trapped traders. We're unsure what the flow that pushed things short actually was, but it seems to me that there was quite a bit of battle over it and that people have entrenched positions on it now, with those positions centered around 12.5 or so. Now, you know, there's 12.5 and 13.5, interestingly enough, not a whole lot is traded at 13. So if we get sufficiently away from this area, I'm looking for, you know, some trap positions unwinding. Well, that one's kind of curious because it did kind of fall through there. I'm not seeing much of a reaction to that, though. Aggressive sellers push. Yeah, I would say so. I mean, how much of a change was it, though? Like, when I look on my DOM here, I can see this 442. That seems significant, but then the change in cumulative delta doesn't seem significant. I am seeing a pretty strong steepener coming through. So you could see something like buying in the 5-year and selling in the 10 and the 30 or something. But I'm not really seeing buying anywhere across the curve. It's a flattener. It's a flattener with them selling the 30-year the hardest. By the way, you know, Octavius asking me to take the picture there. I knew exactly what he was talking about, but it kind of gives me an idea, like, maybe we should just rename the indicator to that. Instead of calling it inventory cost basis, we call it market maker position or something like that. And I don't like market maker position, but market maker something. Someone's catching all this selling across the treasury, says Uzi. Yeah. I mean, that's what it makes it even more interesting, right? Like, if the sellers if the market makers were just jumping out of the way and letting them push it, I would be like, there's got to be some piece of news or something that I'm missing here, right? But what's happening is an extremely aggressive seller is coming in with a move contrary to the PPI news that we just had. And the market maker is seemingly calling the bluff and absorbing it all. They're doing the same thing that I am. Going like, oh, it's okay. I think it will come back up. Yeah, back to the whole 12F. This is a weird one, man. I'm really excited to see how this turns out. I'm still kind of trying to keep an eye on Twitter here. Anthony Crudelli says PPI came in lower than expected, easing pressure on interest rates and stocks. For today, the narrative has been driving stocks lower and rates higher has shifted. Tomorrow we'll get a CPI report and that will set the tone for the next story. As I mentioned yesterday, I believe the bulls will defend the 5800-ish area. Many of my favorite technicians and traders identified support at the levels, so seeing a lift in that area is not surprising. Rates have been so strong that any relief was welcomed by traders. Bond traders have been waiting for a dip to buy for some time, and today's action gives them an opportunity to test the bid. Overall, I think the future of the markets remains uncertain. While some people may claim they know how everything will play out, I believe there are too many potential scenarios to predict a clear direction. Instead, I see a market characterized by ebbs and flows. So one day PPI is the story, and the next, something else takes center stage. The macro theme is unlikely to provide clarity until we see the new administration's policies take shape. What does this mean for day traders? For me, it means avoiding the temptation to buy into the strength or sell into weakness. For example, while I viewed yesterday as a buying opportunity, today's rally might be an opportunity to sell. Expecting significant follow-through on these moves feels unlikely, and I'd rather miss a move than chase a rally driven by PPI ahead of the CPI release. The key is to stay small, wait for your levels to be tested, and step in after those levels hold. Avoid overcommitting and remain nimble. Most importantly, do not let hidden biases influence your trading decisions. So that is an interesting take, actually. So there's two things about that I think are interesting. First of all, I think that he might be right that you might be better off kind of not committing too much at the moment, as much as I am, for instance. But there's definitely a big trade going on here, so I don't know. I kind of, I didn't take the trade because I was seeing this thing form, right? I took it in one spot, said, it could go lower, I'll add to it, and it just happened to coincide with this massive sell. I will take a stop on it here, like at the lows, but I'm trying to hold on. Somebody is now. Well, okay, so why is there not any liquidity stacking at 12.5? That's a little bit weird, but we're starting to see a little bit of stacking on the offer at 12 and 11.5. Okay, what's this Uzi saying? I started getting shorts on YouTube from some futures trader who was trading NQ using large bids and offers as entry criteria and prices using what looks like a 1-to-1 risk reward. And he uses Ninja Trader's 8's on depth chart indicators. It made me oof. Oh, made you oof because you know that, like, how unreliable that is. But, well, that's interesting, though. I mean, was he getting attention from it? Like, was he getting a lot of subscribers from it? Something I find really kind of interesting. Not only unreliable, but laggy. Oh, I see. Yeah, it looks like, yeah, okay. I find like what goes viral on YouTube. You know, there's this whole thing that like, you know, the YouTube algorithm, it does its thing, and if you are competitive in the algorithm, then you know, you have good content, you should do well. And I don't see that. I see that in some instances there can just be you know, a bunch of content creators that are maybe kind of all a little bit the same, and one will just kind of get randomly picked to rise above the crowd. And it's not always the best content, and I see that a lot in retail trading. Like, there's some of these YouTube channels that try really, really hard and go nowhere, and then there's other ones that post stuff and they just see insane success that makes almost no sense. Like, yeah, I didn't look at his stats, but he's basically 50-50 in trades using the most basic of a DOM hypothesis. You know, I think it could be interesting to see the results over a long period, given that his stop and target are sufficiently far away, you know? Puke the long. Well, it's almost to my spot, right? I don't think that I want to lose more than 1,000, so, you know, I guess I get some discretion here as to how I do it, but kind of looks like that I've lost this one. I don't know, like, part of me thinks, okay, maybe there is some sort of a short-term thing causing the selling. But once that flow passes, then the longs can continue. The other scenario, though, is that there is some informed trading going on that I'm not aware of, and that I really should have been puking a long time ago, right? Should probably take grab some using out of the trader list on Twitter now that the election is over. But I am just not seeing kind of feels like there's a little bit of wishy-washiness just around this spot. Like, it moved down and then now it's kind of quieted down, and they're kind of playing around back and forth, dancing back and forth still. Although some of that does feel like kind of maybe more market makers letting it push down rather than the outright market volume. Because the change in cumulative delta on that move, well, maybe not. I don't know. Like, there was the fall from 12.5 down. That was big. But then after that, it hasn't been much of a change. Okay. They have not touched the low from just before the news either, which was at 08. They came one tick short of that, which doesn't necessarily, like, don't use this as a signal. Anybody that's new to the stream might not understand that I pretty explicitly try to avoid trading any kind of price pattern that I see, because they are not predictive. But I'll tell you what, in the treasuries, it's a little unusual how often they will come down to, like, there will be a higher low and it's only by one tick. That will happen. You can't, it happening isn't necessarily predictive or anything like that, but it does happen a lot. It does happen a lot. There's this guy I've been keep running into on r/day trading called I'll add him, Imperfect Circle. He really seems to know what he's talking about. We need to try and get him over here, see what he knows. He talks like he's somebody that has read the research, or maybe he's on this channel. I don't know. Okay, so right there was a little bit of a, okay, we're gonna gear up for another one. I do think that this clicking that we're getting is just the standard market making, and it just kind of happens that we have our filters and everything else set up, it's causing it to happen. We could increase the size of the filter to cancel that out, because when you're getting it like a lot like that, right, that is just the stacking and pulling from the market maker. It's not necessarily what I want to see on the market depth page. So I'm only looking at orders of 500, but I could look at orders of 1,000, and then we wouldn't get as many clicks. Sellers stop out, absorbed by passive seller. No, I don't. After news, but seems PPI don't change major flow. I would say overnight, some mild selling flows. Really major buy impulse off of the PPI news, followed by a very strong and persistent sell meta order. A very large and persistent sell meta order that was absorbed by market makers mostly. And I am kind of starting to get signs down here that meta order is done. Fortunately, I've already taken as much risk as I think I should, so. Oh, that's interesting. There's a thread on r/day trading about warrior trading that's not downvoted into oblivion. Well, let's fix that. Thinking about purchasing. It's currently $3,000. I'm just wondering if anybody regrets spending that money or if it's totally worth it. First comment, I guarantee everything this guy is giving you for $3,000 can be found for completely free on the internet. Yeah. I paid for this course back in 2017. I joined his free webinar and they used the limited time offer tactic and I got duped. Paid about $2,500 for the Warrior Trading Pro program. The course was filled with the details you find in the first few pages of any trading book. There was nothing you couldn't find with a YouTube search, how to day trade. His room was him front-running thousands of subscribers and then dumping the shares on them to exit. The one good thing about his room was that he had a decent trader named Mike who traded large caps. Other than Mike, the room was devoid of any value. I asked for a refund, but unfortunately the grace period had passed. Strong recommendation to find other services. I had an overall terrible experience. Oh, this, you know, like the thread has 3 upvotes overall, but when you go into it, there's like 42 comments. This person that gets giving a really negative review has 24 upvotes. You know, the funny thing is that most of the trader books that I see out there are trash too. Ah, isn't that the guy that lost the lawsuit? The lawsuit was people that lost money after paying for his course because there's no explicit warning that losses can still... I mean, no, that's not what it was. What it was is that they only promoted strong gains, and that was not the result that the average customer got. So it was deceptive marketing. It wasn't just that you have to say like you can lose money. I mean, I'm pretty sure that somewhere in there they say, you know, trading is the risk of loss and yada yada yada. It was like if you promote trading and you say, hey, you can make a lot of money from day trading, you have to give an equal emphasis on the probability that you lose money. I kind of do the opposite. I constantly talk about that you'll lose money and don't really talk about the possibility of you making money very often. But part of that is that I'm really not trying to encourage people to pick up futures trading, right? For the right person, you're going to find us. But I don't need to go and take a regular Joe that he's just looking for some way to make money. This seems interesting to him. Sell him on, you know, a $1,000 course, and then they use that and they're supposed to make a living from that. Does not make sense in the future space. Retail trading that in the future space, right? The person where it makes sense for futures trading is somebody that already has a decent amount of capital, is willing to take big risks, is okay with the money that they put into it being lost. It finds it interesting, wants to be really involved in the market primarily. That's somebody that futures trading is more appropriate for. Okay, we are back to the cost basis at 12. I would note on not much volume either, which is exactly, again, this is a scenario that I think has a very high probability of creating trapped traders. So yesterday, it's especially when I went to sleep. Now I'm thinking about it. It's like, okay, well, I didn't get home until late, so the kids, I was okay, and she doesn't work today, so I was okay. Okay, let the kids stay up a little bit later, yada yada yada. Once we took the iPads away, they fell asleep pretty quickly. But I kind of forgot that I had a hard time falling asleep still. I'm just like, the job hunt has been a little discouraging lately. There was one job I interviewed for that I honestly kind of didn't want. It was for a financial company. They haven't like passed on me yet, but I don't think I'm going to get it based on how that last interview went. And but like, I would probably not be able to do the stream anymore if I took that job. So kind of been rooting for something else to come along, But the problem is that the past 3 weeks I haven't really seen a lot of roles posted. I thought that after Christmas was done, that there would be a deluge of jobs posted that people had been holding back on or something like that. But I'm not really seeing that, and I'm actually having a hard time meeting my targets on the number of resumes put out. And then on top of that, there's still all these people arguing about AI stuff. I tell you what, this whole like singularity concept, like the idea that in the near future, AI will be able to do all programming for us, and software engineers will be obsolete. Of course, we've had many different cycles throughout history where there have been major changes, major game-changing technologies that displaces workers. It always results in the economy growing even larger. It's just that maybe those people that did that particular job aren't relevant anymore, and they have to find a completely different place of work. But I don't think that there's ever been anything on the level of like the most valuable workers in the economy, like some of the most valuable, best paid workers in the economy, all of the sudden becoming obsolete. That would be like sending the entire upper middle class into poverty all at once. Like, it's just absolutely crazy to think about. Now, I'm really skeptical about it for a couple of reasons. First of all, it would be like an insane deflationary impulse to the economy, right? Like, software developers are very expensive. You get rid of that cost, that would really reduce costs for every business in the United States. It would be a huge deflationary impulse into the market, and there are not any signs whatsoever of the market pricing such a deflationary impulse in. I suppose that if you believe in the singularity, that maybe the trade that you would make is to buying the treasuries right now, anticipating that eventually Donald Trump passes, and then it's all deflation after that because of artificial intelligence, right? But I'm not really seeing the markets doing it. And then there's this other thing, which is that all of the people that actually do this for a living don't think it's going to happen. Like, the people that are touting the LLMs, that it's going to replace everybody, are people not using the tech. Is something that seems very telling to me. Like, there's people are all like, oh, you can use an LLM to make your own website and this own business and do all of these things. I'm just like, okay, so why aren't you doing it? Why aren't you a millionaire already? Why haven't you told an LLM, make me a millionaire, and then gone and done the things that the LLM gave you, or you know, told the LLM, you know, okay, so now write me the code for this and start the website and do all of those things. Why hasn't anybody done that? I'll tell you why. Because the technology can't do that right now. It's not accurate enough. And then the errors just kind of compound on top of each other. In fact, I would say that if you go and you say, write me code to do X thing, first of all, it has to be a relatively minor self-contained project for that to even be relevant, right? Because like ChatGPT isn't going to write like a million lines of code for you. Okay, it won't give you a response that large. And then you're going to have to check the code, and it's not going to work the first time, and you're going to have to fix all of these things. And my experience has been that it's faster for me to just write it from scratch. If it's something that I like, if it's like a NinjaTrader program, right? Like, it's pointless for me to go and ask ChatGPT to write NinjaTrader 8 code. I can write it faster than it takes to debug what ChatGPT gives you. You know? So I don't think that that's what's going to happen, but tech bros think it's going to happen. Like, Mark Zuckerberg is like, yeah, we're working on that, and we're gonna be getting rid of software engineers, right? They're totally all on board. So I guess what I'm saying is that I don't see the market getting better for software engineers anytime soon. So I'm really discouraged. I've got 3 months basically, like, shit hits the fan 3 months from now. I'm really not sure what I can do. You know, what another thing development that's happened is that my parents are going on a mission soon, and so if I don't have a job, like, a lot of what is happening is, you know, if I have an interview or whatever, have my mom come over and watch kids, things like that. They're going to be gone. So I'm starting to feel the pressure, man. I'm starting to feel the pressure, and I think that maybe that was part of what made it a little bit harder to fall asleep last night. Maybe part of what made it harder to fall asleep last night. And so I'm sitting thinking about all this stuff, and I'm like, okay, like, my mind is thinking about hedging, essentially. Like, okay, maybe I've come into a dead end in this career, which is, like, absolutely insane to think about, but have to consider that possibility. Well, but I have a lot of things that I've started else that I can pivot to, right? And starting my own business. But then the issue is that all takes time, and, you know, I'm watching kids. I could write a book, but I'm watching kids. I could write a new trading platform, but I'm watching kids, you know, like, I don't have enough time. So I'm not sure where I take it. It would be nice if the YouTube channel just, you know, all of a sudden started popping off for no reason, and that gave me enough room to do that next level of investment, you know, but I don't think that that's going to happen either. Then we came back down to 10. Still kind of flat in the volume, though. You know if Jigsaw has finished updating the newest version yet? Oh, you know, I haven't heard anything on that front in a while. Like, I don't think that there's been a new beta since, like, November. Let's check. Version 5003B. Released 25th of November. So it's been about a month. I'm sure that you know, they might have had, you know, holidays and stuff. I don't know. In, where is it? Malaysia? But yeah, it's still in beta. It seems like that there would have been another release soon, but I haven't heard anything. Nor is there any information. Oh, well, somebody did ask about it a couple of days ago, but nobody's responded. I don't know. Okay, so here's the open in the S&P 500, and the initial move they were getting over there looks like a short, but it's still very early on, so let's let that go. Okay, so there was, we came up here. There was kind of like a little bit of a pullback again, not on a whole lot of volume, coming back into that break even spot. I tell you what, man, is just so, that line is so prescient. What do you guys think we should call it? Should we just call it market maker estimate? Rename it market maker estimate? I really feel like that there could be some research done on this thing, and I just don't know what it is. So we need to get somebody else involved. Core position. Well, I like, from a marketing perspective, saying that it's like market maker or something. And like in Ninja Trader, we can just say MM. Okay, so now a touch of 13 would be slightly above or outside of the range of what they've been trading lately, and might be, well, we are seeing a gentle push up in volume. Wow, all the way to 14 now. I think the market traps news traders these days. Maybe. I mean, the real question is, what was that selling flow now? Right now that it's coming through like this to 14. So 14 is the buyer's cost basis. So that's a significant change. Like, from my perspective, or the way that I've been using it, right? Like, we have a large impulse down. Like, we're gonna come and bounce along that line, and you can see that we did. Across all the way across is a more significant thing. Maybe that's the way that I need to try and backtest this. Is like, wow, what would be the best way to do it? One of the issues that you get is like, okay, what's like the trigger, you know? okay, we're below this cell, and then we cross up above the high. But I think that that's too common. I think that it has to be not just that it gets below this line, but that it gets a certain amount below this line or something, you know? So it's like, it's down here, and then it mean reverts, and it doesn't just mean revert, it crosses the chasm. Then what happens? What's likely to happen after that? But anyways, a touch of 14 seems more significant. It looks like it was a hard bounce off of it, though. Well, I think this pullback kind of makes it seem a little bit more random, though, doesn't it? I don't know. We're just gonna have to let this play out, but yeah, hopium is one hell of a drug. I was hoping that I was gonna be able to take some of the size off, but it didn't quite get there, did it? I think that I just kind of have to hold on for dear life and hope that they don't go and break the lows. But I like, basically it was doing something that was very much confirming what I thought was going to happen, and then immediately it came back. So I don't know what to think about that. Is that like the whole move up was market maker shenanigans? Like, there is no more large meta order, and it's just the market maker messing with us? That's what I'm thinking now. Well, today I was planning on doing some more Rust stuff, but I kind of feel like that we should continue to monitor this trade and stick with it. You can go long down here and blow the whole trade. Well, it's they seems like that. Okay, so 30 minutes ago we were like, okay, I might have to just bail on this, right? It got up to that thing, and now we're back down here in less than like 10 minutes. Less than 10 minutes, we're right back down at the low. So it took 30 minutes to get all the way, and then 10 minutes to get back down here to the lows. I'm not on really a significant change in volume. Well, that right there was a significant change in volume. Yep, we're puking. And I'm just going to push that button. That's the end of that trade. That big flush in more volume short, I think pretty much is more than I'm willing to take on it. So, but we're back to what's causing the selling. Very curious. Kind of makes me excited for CPI tomorrow, though. Is it the dollar rally? It could be. It could be, because the dollar is the dollar rallying here is kind of seems to be the culprit. At least you can see when the dollar shifted is exactly when the treasury shifted. No, I just took the trade off at like minus, was it quite 1,000? It was around there. It was about the largest that I'm willing to take with that sim account. It was a sim account. Okay, yeah, it was over 1,000. But it was within the parameters of the strategy, so I guess take a big risk, but it didn't work out that time. The face when accidentally not sim, yeah, that would, nope, it would have stopped me if it was that. I think I have to have the full contract margin in it for it to let me trade it. So. I'm a little worried that now that it stopped me out, that now it's going to go up and it's going to, you know, the original trade is going to work out, right? Yeah, the way she goes, it's totally... I don't know, though. I'm a little bit skeptical. Like, I think that we could maybe get back to 14, maybe even above that. But I'm a lot more skeptical about seeing like a counter buy flow now. In fact, part of me kind of wonders if that move to 14 was like the trapped traders and like the trade is over. The trade that I was looking for was over and I just didn't get out. You know? But we're very much in a situation where because we don't know what drove that flow, you know, there's like too wide of a range of possibilities for me to really do a very effective analysis of it. Recenter there. Longevity obsessed tech millionaire discontinues de-aging drug out of concerns that it aged him. This range from no trader got it. It's just like, okay, the meta order was short. Sell meta order. I thought after sell meta order, we will revert and then we will see trap traders come out. And so we'll see cumulative delta come back up like this, right? And it didn't. It basically, like, okay, it was flat here. We did get this kind of spot, but this is kind of where I would expect people to start puking, and it didn't happen. So, I think that kind of cancels out the trade overall. I mean, as far as trades go for me, if it had pushed even lower here, then that would have been like the worst case scenario. It was just dead wrong, etc., etc. This one, I was right in a way, but it really did not play out in price the way that I had hoped, which is something that can happen to you, right? Like there's a high degree of correlation. This is a very interesting thing. There's a high degree of correlation in order flow signs, right? Like so if we're seeing selling, then in an hour from now we probably will still see net market selling. And I can come in and I can anticipate it. I can say, well, here's an order that's going this way, and here's an order that's going this way, etc., etc. But you notice that I always say that it's with order sign, not necessarily with price. That's because there's other factors involved in price, like the dollar index, for instance, right? So it kind of looks like in this instance that maybe I was right to a degree about how the flows were going to play out, but it didn't result in a profitable trade for us because, one, it wasn't enough there wasn't enough trapped traders to really make it a worthwhile trade, and B, because a brief rally in the dollar ended up dominating the price. So
block sell.
holy shit. And the dollar jumped there. What is going on today? Yeah, wow. And again, none of these impulses have been accompanied by news results. Breaking news. None of this has been accompanied by breaking news. There is an insanely large sell meta order contradicting the PPI news that we're having today. It's like somebody is taking a huge bet on inflation and they're using PPI as the opportunity to do it. I don't know, man. It's just crazy. I've never seen anything like this from like CPI PPI news. I've seen moves like this that perplexed me on non-farms day, where it's like the non-farms was like very clear and the flow ended up going in complete contradiction of what it suggested. But I've not seen that happen off of any other news, you know? Send you a picture. Cool. Option selling in TLT maybe. Oh, red is a large. You're saying that there's a spot in TLT that kind of suggests that there could be support down there. But that correlates to us in the treasuries. Not quite sure. Gotta buckle up. This is gonna be a crazy month. Yeah. Like the thing is if the treasuries keep selling like this, man, like something's gonna break. Something's gonna break in a major way if the treasuries keep selling like this. Like so far they've kind of like they've gone to the point like just before everything starts to really go wrong with it, right? So I don't think they can really go much further before the equity market would really flip out about higher rates. We are getting back towards the before the news price level in the S&P 500, so that's worth noting. there's a lot of post-election gaps being filled. You know, so I was thinking about that yesterday, Uzi, and I'd seen, oh, what was it? It was something on Zero Hedge, essentially talking about the various things like different options expirations and all of this sort of stuff. Basically, kind of suggesting to me that maybe that was how that guy was able to predict the time of it. Was that he knew that like certain flows would have to unwind before this certain deadline. Yeah, he's an options quant. Yeah, this is very curious. Looks like the treasuries are coming back to that 12 again. So I was had this conversation with somebody, basically saying, look, like watching a single time series and trying to make decisions from that on like especially on 1 minute bars, I'm not sure if there's any edge in that. I really don't think that there is. I mean, I wish that there was, and I would really love for somebody to falsify that and prove it wrong. But everything that I've done and looked at suggests that it can't be done, at least not anymore. And so they said, yeah, so indicators. So does that mean that an indicator can't provide an edge? Oh, well, indicator is too broad of a term, right? Because an indicator could bring in an additional data series, and then we're talking about something completely different at that point, right? Like I could write an indicator that just draws a random line, you know. But then I was like, you know what? I should do that. We can have Stock Market Steve can create his own indicator on TradingView, and the indicator can be completely random. Like the indicator will just draw a random line, and then we'll see if people try trading off of it. random long short indicator might actually be helpful for the guys with negative edge. like the thing is that if I gave them a line that was just random, how would I how would they choose to trade off of it, right? So I think that it would need to be a little bit more complicated than that. Like I could make an oscillator that oscillates between 0 and 100 randomly. And then you can tell them, like, okay, so buy when it's below 20 and sell when it's below, or, you know, whether it's above or below 50 or something like that, right? Like basically you need something that's random, but it displays in a way that would generate enough trading signals, even though this trading signals that it would generate would be random, right? Or perhaps you make it be like a line that draws on the price series and is random relative to the current price, right? So like maybe it can't get further than a certain standard deviation away, so that it's always like still there on the chart, but right? Or let's say you look at the chart range. So we have this, you know, I guess we could open up a new one. New chart. So like we can say the line has to stay within what is currently visible on the chart. But then other than that, it's random. And then are we above or below the random line? Then you go long or short or something like that. I think the oscillator would probably be a better one. Oscillator would probably be a better one. Now, of course, another thing is that if you had, if we had like an oscillator like this down here, right? If I just say it random, then you're gonna get something that's like all over the place, right? If I just pick a random value between 0 and 100, that's not going to match, right? It would look like nonsense. So you'd have to have something that's like, it starts here, and then I can move up or down a random amount, right? But then even then, you would probably want it to oscillate back and forth, because if it just does this, again, like people might, it would be able to seem, it would seem random like right away. So there would have to be, like, it would have to be pseudo-random. It would have to be pseudo-random. I guess the issue is if I wanted to give people a random indicator, why not just have them trade with MACD or RSI or something like that, right? That would be better anyway. But the point was that you could get people to trade a random line with conviction. I think that would be the thing, yeah. And I don't think that I would sell it. I think that I would put it on TradingView. I would make it free. I'd give it some cool name and have Stock Market Steve market it. And we can have like I'm gonna have to think about this a little bit more, because I have all of these visions of like Stock Market Steve cherry picking charts, points where it seems like the indicator works, right? Even though it really truly is just random. But I don't think that you could morally do it the way that whoa, that S&P moved there. S&P moved there. Not hearing anything from my new squawk though. No, I don't see anything. Yeah, because I mean, all of the things required by me would be to like in the indicator say this indicator is a hoax, yada yada yada, right? So I don't think I'm gonna do it, but it sounds like a fun idea. But the whole idea that I got it from was somebody saying, well, so if you can't really make money from a single time price series, then that means that like any indicator that you add to a chart can't provide edge. And that's not exactly correct, because a chart indicator can be doing anything, including adding additional data that's not already there on the chart, right? So I think that the proper term would be, or at least in the post that I was there, I think the proper term would be a function. So if you have a single time price series, any function that only takes in that single time price series as input is not going to provide edge. That is my assertion. That is my theory. Now, a function would include a price action thing. Like that's the other side of it, is that the price action people, they deride indicators because they say indicators are lagging. Okay, so here again, indicators is too broad of a term, because an indicator could be like volume is an indicator, right? So it's adding a different data series, it's adding the volume data series on there, right? But that they consider their methods better because they're not lagging. But that would still be a function that you are performing on with only that time price series as the input. So my assertion is any function that takes a single time, a 1 minute time price data series has no edge. That's my theory. And so to falsify it, we would have to develop a function that you pass that one single time price series into it, and it actually results in profit. And I would even say that the function can be like, it doesn't have to make profit on a risk adjusted basis, or it just has to over 5 years beat out the commissions. It's profitable after commissions. Function only takes a single time price series. And this whole thing is that pretty much every indicator that I write includes more than just that price. It's pulling something else in. It's recording something else and showing it to you. Or it's a filter that is intended to be used with these other indicators that, because like for instance, I have a Kalman filter in there, right? You're intended to apply the Kalman filter to other things where you're using more than just price, right? That Kalman filter, you should be able to apply it to any data series, not just price. Applying it on price kind of would make no sense, but you could apply it to something else. Now, I guess another interesting facet of this would be options. So options would be, here again, I think, adding additional data series. because there would be the price of the option and the price of the stock. Okay, but then there are, I think, some systems that were market making systems that can provide edge that way. But the thing about the options is that you're not making money from directionality, right? You're making money from predicting volatility itself. So you might not know that it's gonna. You can make bets that it's gonna go up or it's gonna go down, and just basically say, well, if it does go up, it's gonna go up a lot, and a lot more than the market is pricing. But you can also just base it on the volatility that we're going to underperform or outperform the market's expectation of volatility. And so there's this other facet of, okay, the difficulty with creating a profitable strategy for like a retail trader, that part of the issue is also that for the kind of trade that we're going to trade, which is like what I would call an outright trade, right? I can choose to buy or sell at a given time, and that's basically it. And on that one instrument, I'm not managing a portfolio, right? Then the issue with the outright trading is that in order to have a profitable trade, you have to predict the direction, which is difficult on the short time frame, unless it's a really, really, really short time frame. Where are we at? Basically hasn't really moved a whole lot now. Well, I haven't done any rest stuff, but I think I can bite into that. Where is it? I think I can bite into that heavy today. Maybe I can get a third of it done today. And part of me is like, just start writing stuff, but like I'm finding this really useful, and part of it is like I for Rust, like other languages, I can kind of be like, oh, I forget how to do an if statement, search for it. With Rust, I really think that I have to like memorize the syntax and the rules and stuff. Don't think that I would be very effective in coding it otherwise. Kind of, it makes me think about so the Primogen, he's been going on this little journey because like, for the past year or two, he's been programming in Rust, and he has decided that he doesn't like doing it. And I don't think that he's saying like, oh, the language sucks or anything like that. It's just like the kind of application that it's good at is like a kind of a problem that he doesn't enjoy doing, I guess you could say. So he's looking for a new language, but the thing that I think is kind of funny about it is like the language he's using is like, or the use case that he's talking about is like, I just want to be able to go and do a request from this LLM and then pass it on to this LLM. Some of the things that I've kind of done here on the stream. He actually has some things now that are similar to what we were doing before the pandemic, where we would pass it to like your comments to something and it would read them out to me, right? Like the best language to do that sort of stuff in is Python anyways, like his use case isn't really language heavy, So I was like getting excited, like, oh, what's he going to choose next? But then I'm kind of like, oh, but it actually doesn't matter because really what is it to me is a platform to develop performant desktop Windows applications. That's what I care about. Is something to develop like Windows, the operating system, applications for Windows, desktop applications that are performant. Not necessarily a game, but something that is performant and has an interface, like a video editor, or an IDE, or in our case, a trading system. What's the best way to do that? Well, you can do it in Rust, but like when it really comes down to it, what has happened essentially over the last, I would say, almost 15 years, is that by and large, most applications have gone the way of web development and have become web applications. And so there hasn't been a whole lot of progress in systems that will build performant desktop applications. And by and large, people still do it with C++ and third-party libraries. Just don't want to do it in C++. So I guess I'm going to do it in Rust, because I don't know if there's really any other alternative. C++ is fast. Well, Rust is fast. But Rust has or C++ has other problems. You know, the funny thing about Sierra Charts is that I think that if I make my platform, that after a year, Sierra Charts will probably come in and try and copy everything that I did in their platform. But I don't think that it will work very well, because there will be certain bits about it that will just be so contrary to the way that they've built their platform that it won't work. Like, for instance, I think a major part of my platform is that I want you to be able to do all strategies and indicators in Python. So like you can write an indicator in Rust, and I think that the ones by and large that I provide for the platform will be written in Rust, but you can write them in Python. And will that really, what would they have to change about their platform to make that work? Like, what are things that they're doing, how they are storing the data and dealing and handling with the data and so forth, that might make that difficult, right? Because the larger thing that I'm trying to accomplish here is a platform that gives you the complete flexibility with the data that I don't think the platform gives you. Like, I want you to be able to, like, I think the next step of this, now that we have all these indicators, they're outputting the data. Like, I think that the next part of it is take that data and put it into a data lake so that you can manage all of those files instead of them just sitting in folders or instance. Oh, I totally didn't mention this. We should talk. I should have brought this up way earlier. So yesterday, a video started floating around. It was basically a recording of one of the founders of Apex Trading, basically talking about how they mess with traders to screw up their trading. I kind of think that I've heard something like this before, but I hadn't seen video evidence of him admitting to it. But he basically said, like, we have a bunch of traders that are going to be taking payouts that have all applied to have payouts in the next week. And so we send them an email saying that we're watching their trading, and that we think that there might be something wrong with your trading and that we're going to dispute it. And as soon as you start doing that, like, their performance tumbles. So they're like actively messing with the psychology of their profitable traders, causing them to fail so that they don't have to pay out. That's a pretty crazy admission. And, the threads on Reddit I thought about it were very interesting because people were like, oh, see, this is why I just don't use that prop firm and I use this other prop firm. And then everybody started going down through, okay, here's all of the ways in which the rules of that prop firm are basically set up to make you fail. It really seems to me that the prop firm industry needs to be regulated, but I highly doubt that anybody in Washington is going to pay attention and do anything about it. We're going to have to be like a group of people, like it has some broader impact on the economy or something before they'd ever do anything about it. But the crazier thing is that like some of the subreddits were taking the video down. Can you believe that? Yep, and this was just a little that he was willing to speak about over a video call. He alluded to much more that he couldn't even speak about. Yeah, so here's the thread. This one, I think that it got like removed a couple of times, but then this one has stayed up. Here it is on Reddit. 'Have you seen the legal documents in the lawsuit Apex is in? They rake in 10 to 15 million in profit per month. That to me is like, are there really that many people doing this? That's crazy. Psyching out 84,000 PAs. Is that how it was? Is like 84,000 people that were going to get? That can't be right. Yeah, removed by r/day trading mods. Somebody posting a picture of it being removed. Days ago that it was posted and removed. When anybody says stop recording, that is when you should definitely stop recording that. But he couldn't, he knew that he shouldn't be saying that and that somebody could be recording him. And he said it anyways, which is kind of interesting. Kind of maybe gives you some insight into the person that's running that, you know, running things. Well, it really seems like that the treasuries are done for today, man. This whole thing is very odd. But let's just see what CPI is tomorrow. Let's just see what CPI is tomorrow. Yeah, it really is scummy, man. I would say it's the lower end of the range, though. So, like, even though I kind of got psyched out of a position a little bit, like, it still would have been a loss either way, right? If some mind games are all they're doing, though, they're more honest than I figured. Well, he kind of, in the video, he kind of implies that there's more that they can do than that, but a mind game's just to start. I mean, he's basically saying we lose money when you guys make money. Like, that's the thing that it really comes down to. Like, what's wrong with the bucket shop? Why did they make bucket shops illegal? Well, I think part of it was that, you're taking a bet against the trader and then the stock goes up big and then they have to pay out or whatever and they're out of money and other people are maybe owed money or something, something like that, right? Like there's this concern that they won't be able to provide the service that they do. But wouldn't that necessitate that, you just have to follow certain rules with it, like that you actually are placing the trades and hedging them and all of that sort of a thing? Like, why is a bucket shop actually illegal? And but then on the split side, like forex trading is illegal. But it's not illegal, but like a lot of forex trading firms have been kicked out of the US. Why? Because they're basically trading against their customers, right? And so that's what I think is really actually wrong, is that prop firms have essentially become a business model where they are trading against you. They make more money from you failing and trying to do the combine over and over and over again than they do from you being successful. They got this whole thing that's like, well, but we're going to fund you and then we make money. We make a percentage of your earnings when you're funded and you make money, right? But then they don't actually put you on live accounts. So they're not, they kind of are giving you this claim that your incentives are aligned when really they aren't. They are exactly opposite. So I think that, government should come in and regulate this, but the issue is that once they start regulating it, the business won't be profitable anymore. It will just get rid of it, probably. Because if they were forced to, if there was like, you can't have live sim, for instance, has to be a live account, then they don't make money anymore. Because then when you get funded and lose money, they lose money too. We'll stick around for another 15 minutes, but I don't think much is going to happen. Is it even viable to work as that? I really don't think so. Like, I think the whole prop firm idea is the issue that you're going to get is that the majority of traders are going to fail. And whatever kind of test that you set up, I think that over a 5-year time period, the majority of traders that pass that evaluation will still fail within a 5-year time period. So, like, trying to glean some sort of larger edge by harvesting the edge of retail traders, it's not going to work. An individual retail trader might have edge, but it's going to be extremely rare. Like the whole issue here. So it's kind of this ironic contradiction that we've learned a lot about markets that really conflict with the dominant narrative of the markets are efficient and all of these things, right? So you have something that is an idea that is very disruptive to the current systems of power. But in order to take advantage of those, it requires scale. It requires you to be part of that establishment, essentially. Right? Like the known inefficiencies in the market that I know of require you to either be informed, fast, or have scale. Or some combination of the three. Ergo, starting a prop firm and doing all the retail traders doesn't make sense. Like, so now I can kind of see the perspective of the person that starts the prop firm, though. It's like, they're going to do it anyways. Let's provide a vehicle for them to do it that reduces their risk and gives them the best chance and all of these sorts of things, right? So I think that there can be some good intentions behind it. It seems to me that the Top Step Trader guys, they started out with good intentions. The problem is just that the very nature of the business pits you against the customers in the end. And I think that the larger retail trader community has kind of been living this delusion where they kind of ignore that. They ignore that fact. So everybody always, so like you say, should I do a funded trader program? And like the first comment that you usually see in threads like that is like, well, they make most of their money from people failing the combine. But I think that what you should say, like the fundamental issue at the heart of all of the problems with the prop funds is that their incentives are intrinsically aligned against you. They make more when you fail. They lose money when you succeed. And if they had everything set up so that they make money when you succeed and they lose money when you fail, they would not make money because most retail traders fail, right? If the evaluation was free and they only made money from funded traders, it wouldn't be a profitable business. Which is to say that I'm going to bet you that they net lose money on their funded traders. Which is why they don't put them on live, except for in some very narrow instances where somebody just seems to be making insane amounts of money. And you're like right on the edge. I'm still here. Like they gonna go for it? I kind of think not, but when you zoom out now, the net change is so big. Now it's like I was so wrong. I was so wrong. I had an expectation of the flows. The actual flows were different. I was just wrong. What it was in the end, I think. There were some points where we were kind of saying, well, within the duration of the trade, maybe it was okay, but like a larger picture, I think we were wrong. And I would really like to know why. I would really like to know what's causing the sell. I mean, really quick, let's just come over here. I haven't looked at zero hedge. Race for a surge in CPI tomorrow, says zero hedge. Am I misreading the news completely? For a change, we get to see producer prices first this month. While central bankers are sure this resurgence is a blip, a transitory rebound on the way to 2%, analysts are far less convinced with expectations. Analysts were right on direction, but not as magnitude, as headline PPI rose spot 2, pulling the year-over-year PPI up to 3.3 from 3.0 prior, but below the 3.5 expected, the highest since, so just looking at the yearly. Surge in PPI was driven by the highest month-over-month jump in energy costs since February. Core PPI was unchanged month-over-month, leaving the year-over-year core flat at 3.5%. With December's data in the bag, we can take a look at the Biden administration's disaster overall producer prices. It doesn't look like I did, but perhaps maybe somebody looking at the larger number, perhaps. Hold on. Oh, it looks like it's time for me to log in again. Hold on a second. Given how edgy bond markets have been so far over the last week, Deutsche Bank's read notes that some bigger picture nervousness has been created by a few themes/data. 5 to 10-year inflations hit their highest since 2008 on Friday. Yesterday saw New York Fed 3-year inflation expectations up. Oil is up 17% since December. Payrolls exceeded virtually all forecasts last Friday. And we saw a spike in prices paid in ISM services. The last point is perhaps noteworthy, as read highlights in the chart below. Plotting the ISM services prices paid against year-over-year US CPI shows a strong correlation, even if the former is far more volatile. Correlation between the two is highest, with CPI responding around a quarter after prices paid. So I think that the best explanation that we have for the sell flow here today is that they're ignoring PPI and they're looking forward to CPI. And I think that's the best that I got. More spam. I tell you what, I get so many people trying to like sell me on things for the YouTube channel. And unless you can show that you've actually watched the channel, I'm not. We even had some people from larger channels try and sell me on stuff, but it's like, this is not relevant to my audience. Now, why did my voice get disconnected? Oh, my internet might be acting up a little bit, but you know what? It's time to go. I think this is a good place to stop it, shall we? So I will see you guys tomorrow. In the meantime, stay excellent.